Hey there, good afternoon everyone. Chris here with Green Bar Trading, also known as Ghost of GBT on Reddit. Happy Sunday fun day to everyone, and thanks once again for tuning into our weekly charting and technical analysis video. So I did something a little bit different this week. I'm going to, I already picked out the top 10 so that I can just kind of zip through them, and then if I have any other time at the end, I will go back through the others. So we're just going to dive right in. It looked like the very first one with 10 points was ATVI, and that was long. So we're going to start there, and hopefully this will go a little bit faster. So ATVI long. Yeah, so this has been beaten down pretty good over the last month and a half or so, and it looks like it is now right into this longer term trend line. So it's going to take a little while for this to move. But this is actually a good spot to take a longer term position, I would think. I mean, the S&P 500 right now is still a little bit extended in my opinion. We might need a pullback down more into the middle of this range here, down into the 216s. But I think this is definitely a good time to start watching ATVI. So maybe it looks like we had a little bit of a reversal candle here on Friday, so it's going to need to reclaim the 200-day moving average before it can really take off again, and this is going to be sort of a slower mover. So if you want to trade it for just a short-term trade like I would, then you'd probably want to do it with the stop loss somewhere around there. So maybe see if it holds 35.50 or potentially, well, depending on how it opens, right? If it opens below 35.50, then you want to see if it holds Friday's low, which would be 35. And if it opens above this yellow line, then you want to see it hold that yellow support area. So I do like this. It's a good stock for trading. It's a little bit slow, and it doesn't have a huge range. So it's a good stock if you're a beginning or intermediate type of day trader. It's not going to be super volatile. It's going to move pretty well. It's pretty liquid. So overall, I like it. Also, if you're a longer term trader and you want to trade it based on the weekly chart, then yeah, I would think this is probably a great time to grab some, even if it's, continues to dip down into the 33s or 32s even. It's got upside if you hold it for a month and a half or 2 months, all the way back up to 45. So you're still only risking, if you buy it down here based on the weekly chart, you're still only risking really a couple bucks per share to make, $10 or $12 a share. So looks good. I like it, and it'll be on watch. Next up, Amazon. Amazon also looks good. 7 or 8 days in a row here. What do we have? 1, 2, 3, 4, 5, 6 days in a row red. And so general rule of thumb, whenever you see a stock that is trending, for me, I usually see 5, 6 days in a row at the most before you get a little bit of a relief bounce. So I'd be watching this on Monday, I guess, to see, let's look at a 30-minute chart. Just to see if it holds 738 maybe, or 737.50 area. So see if it holds that sort of flat line bottom that it's starting to create here. If it does, then you can use that as your stop loss. If not, then we might get a pullback into the 720s here and bounce off of the 200-day moving average. But overall, Amazon's not going anywhere anytime soon. I like the stock. I like the range on it. It looks like it's in a pretty good spot. Looking at the NASDAQ. NASDAQ had a little bit of an attempted bounce on Friday, so we might see some action there, which would help Amazon. So yeah, I mean, I like it overall. It's going to be probably a little bit too slow for me to trade it. I might trade it as intraday trades, just kind of in and out throughout the day if it kind of gets onto a run and goes from, 740 to 755 or something like that. I'd be trading it along the way and just scalping $1 a share here and there. But, if you're a slower trader, then I could definitely see this being a good spot to buy. So Amazon long, good shot. Nice chart. Gilead. This one I do not like so much. And the reason I don't like it so much is because it is, not only is it it's been under the 200-day moving average for quite some time. It's in a downtrend, a pretty clear downtrend, and it's sort of channeling, and it's kind of right in the middle, or at best it's in the middle. At worst, it's kind of at the bottom of its channel. So I would not long this thing here. I would want to see on something like Gilead, I'd want to see a catalyst of some kind, like earnings, like over here, or some kind of FDA news or governmental regulation news, something along those lines to get this thing moving, because otherwise you're just going to get chopped around. This stock is riddled with high frequency traders. It's riddled with algorithms. So you're going to get chopped around, and you're just going to end up losing money if you trade something like this without a catalyst. So there's no real specific pattern on the chart. I wouldn't personally touch this right now until it starts really forming a solid bottom and you start to see it sort of round back up and attempt to maybe reclaim that 200-day moving average. Until then, I would leave it alone, or until there is some sort of a catalyst to make it move, like one of these earnings releases or some kind of news to get it going. So there you go. There's Guild. Let's take a look at TTMI. This is Ttm Technologies, which I believe is a semiconductor company. Yes, printed circuit boards. By the way, any of these companies, if you're going to be swing trading them, if you're going to be holding them for more than a couple of days, always make sure you check FinViz and check when their earnings are, because you don't want to be holding through earnings. It's something that I don't normally do on these videos, but I always do it when I'm trading, especially if I'm swing trading. So like this one, Activision's out of the way. That was November 3rd. Amazon, I think, is out of the way. Amazon was October 27th. And then Gilead was November 1st. So yeah, all these are out of the way. We're kind of out of earnings season at this point, but it's just something that I always do, just because you don't want to be holding through earnings and get caught in one of these big gaps. So let's see, TTMI. So we have 10% short, 9% short interest, 99 million shares in the float. So that's going to be a good trading stock. It's going to be volatile, but not too volatile. It's kind of a sloppy chart. There's no real super big, nice pattern here. We have this one big volume spike here on the 17th of November, which I'm guessing was some kind of news. So they actually just did a secondary offering. TTM announces pricing of secondary offering, and what was the pricing on that? Was $11.50 per share. So TTM did an offering at $11.50, which to me says that they believe, $11.50 is a good deal for their stock. So with the stock sitting at $13 plus not really that great of a pattern, I wouldn't touch this one. This is not a stock that I would long right now. So I would leave this one alone. I don't really see any potential for it until it starts to get back up towards these highs at $15. So once it starts to approach 15, then maybe we can look for a setup. Until then, it's too extended to really be in a confirmed uptrend where you can just buy it. Like ATVI, see how clean this is? You could just buy this thing anywhere and eventually it'll probably go up. Same thing with Amazon, right? It's a clean chart. It's a smooth trend. Eventually it'll come back. TTMI, it was downtrending for a while, and then it started to widen its channel, and then it broke under lows, and now it's kind of gone way outside of its channel. So this is just sort of a big sloppy mess. So I would not touch this one. Next up, Post. Is this a cereal company? Post Holdings. Yeah. Wow, only 63.8 million shares in the float on this. I thought this was a much thicker stock, but apparently not. So 8% short, 63 million shares in the float, so that's not bad. The pattern, meh, don't see anything. Earnings is November 17th, so that's out of the way. And it looks like it was indecisive on earnings. See this big sort of indecisive candle here? Wick on the top, wick on the bottom, closed red, and then the next day it wicked back up to highs. So Lots of indecision, it seems, on this one. What I'd be watching for on something like Post, because it is in sort of a good area based on like the weekly chart. I mean, 65 would be better, but it's not in a terrible spot on the weekly chart. So I guess what you could watch for is to see if it holds, if it can reclaim this 200-day moving average area here, like 77.50s or so. If it can get back above that and sort of develop a trend between like, or develop a pattern between, say, 77.50 and $82. So if it can develop a trend, not necessarily a trend, but if it can develop a pattern somewhere in this area, then I think you might have a trade. Until it does that, it's a non-trade for me. I would not touch this one. HCN, Welltower. What kind of company is this? A REIT. Okay. Healthcare facilities. 356 million shares in the float, so it's a little bit thick. It's going to be a very slow mover. I don't really see anything exciting on the pattern either. It's in a downtrend. I'm assuming this is a long. HCN long. Yeah, so aspiring ticker. HCN long, por favor. I do not see any real reason to long this thing. What was the news over here? Earnings probably. 11.9, 11.10. Maybe, I guess, just after the election. That was the reason for the gap there. I don't know. I don't see anything on this chart. Just not the type of stock I would trade. It's a REIT. It's high float, very low short interest, doesn't have a lot of range. It's expensive, and it doesn't really have any pattern. So I would leave this one alone. Not my style. Cena. Now this is my style. Shady Chinese internet company. That's the kind of trade that I like. 58 million shares in the float. 1.5% short interest. So not a ton of shorts, but it's a China stock. China stocks are just naturally kind of wild in my experience. And this one's liquid too, which is nice. So Cena long, I'm assuming, right? Oh, it's supposed to be Sina, actually. Damn, I was excited. This actually looks good, though. I would say that this is a potential bounce off of this area right here. So you could potentially keep that on watch. It's not the one I'm supposed to be analyzing. What I'm supposed to be analyzing is SYNA, which is... This is I'm assuming a biotech, Synaptics. Oh, it's actually application software. Interesting. Okay. 34 million shares in the float, 12.64 short interest. What's the reason for this big gap here on November or October 30-something? October 28th. Lower gross profit. Needham throws in the towel. Okay. So, got downgraded, bad earnings, and nothing really exciting on the pattern. For me, it's just oscillating sideways, right? There's no real clean spot where you can buy it. There's no clean spot where you can set your stop loss. So this is a chart that I would not even consider. It would not even catch my eye. And that's the case with a lot of these, right? Post, maybe Post, but HCN, there's no clean spot to put your stop loss. There's no clean spot to buy it. TTMI, same thing. Where are you going to buy it? Where are you going to put your stop loss? You're just kind of buying randomly in the middle of all of this. So I wouldn't touch that. Would not touch Sina here. I just don't like it. There's nothing exciting about the chart at all. Bank of America. Okay, so as this person here said, Homo sapien from Terra said, share flow is 10.5 billion, so very big. So yes, that is very true. The stock does have 10.5 billion shares in the float, or 10 billion shares in the float. There's no shorts in it. So this is going to take an ungodly amount of volume to move it. Not to mention the fact that it's very extended right now. It's been running from basically the beginning of November until now. And this is just going to move with the S&P 500, with the NASDAQ, with the Dow Jones. I mean, all these things are due for a pullback. And so Bank of America is most likely going to go with them. Bank of America is going to be exactly the same as if you look at like Citibank. Same pattern. See that? That's Citibank. There's Bank of America. So you got almost the exact same pattern on these two big banks. And almost every bank and every sort of financial, like large financial corporation and possibly even like real estate stuff is going to look like this because it all just moves with the market. So I wouldn't touch Bank of America. Definitely just not my style. So ERS, we're talking about Bank of America here with 150 something million shares of average daily volume. ERS being the complete opposite. This thing hardly trades at all. On its big days over here, it did just over 100,000 shares. So this is just way too thin for me. I like the idea. The pattern is not all that bad, honestly, but there's no easy way to trade this thing because it just doesn't trade enough volume. It's too thin. There's not enough people that are interested in it to really make it go anywhere. If you do get a big spike, you're not going to be able to sell it anyway because the spread is going to be 30 or 40 cents. So I wouldn't touch ERS solely based on the volume. I like the pattern. If this stock had this exact same pattern but did 2 or 3 million shares a day in volume, I'd be all over it. But this is not enough volume to really trade. And last up, EMES. So this is an energy company. This is going to run with oil. So we all know oil has been hot the last couple of days after this OPEC deal. And we're sort of consolidating here on USO, which is the United States Oil Fund. We're consolidating right underneath 1150. So if USO breaks out over 1150, I would expect EMES to probably go with it, being an oil and gas equipment and services company. Also, very low float, 26.8 million shares. It's got 10% short interest, so it is sort of a squeezy type of stock. You can see it's got a history of making big moves. Like over here, it went from $5 up to a high of $12.06 in 6 days. So that's the type of stock that I like to trade, where it has a history of making big moves. It's got a history of big days, big up, big down days. It's volatile. So I would be watching this primarily if USO breaks over 1150. I'd be watching this to kind of break out of this little dealio right here that it's got going on. So keep that sort of area in mind, I guess. And it looks like your stop loss would be probably maybe under the 1220s. So give it 1210 or 1205, something like that. Maybe even see if it could bounce off at $12, because if it does take off, right, you've got from 1250, if it kind of gets over these last highs at 1375, it could run to 14 or 1450 or whatever, right? It's got a history of making these big giant moves. So it's not unlikely that if USO takes off over 1150, we see this thing up at 16, 17, 18 bucks, especially with the fact that it's been really, really, really beaten down, and now it's sort of trying to come back over on the weekly chart this big 1560 area. So it's got a little bit of work to do to get up there, but this thing could run to 20 or 25 bucks over the next several weeks if oil holds up. So there's my analysis on EMES. I like it. Low float, high volatility, decent range, nice volume, and it's got a reason to move, meaning oil is its reason to move, right? Oil being hot because of the OPEC deal. So there you go. There's all the ones that were in the top 10. And let's see what else we got, just since I got a little bit of extra time here. Blx Tesla Hov. So this one was interesting. I've been trading this one long, actually, for the last couple of days. But yes, I would agree that this is approaching potential area for a short. I would think maybe like the 250s, like up here. So if it can hit that spot, then yeah, I would think, well, I should say if it can hit that spot in, just a couple of days. This was just a big breakout, right? Because that $2 level was huge for it. So you can see it's been trying to get over $2 for a long time. So this is really sort of a breakout. So it's got a couple more days to run, I think, before it can really be a short sale. But it definitely has the potential to become one in the near future here. So maybe 250, 260 area. I would be interested in shorting this. Let's just take a look at the short interest. So this has only got 10% short interest, which is not too bad. And it's gone from roughly 160 to 220, which is 37.5%. Typically before these things become a real high probability short, I'll see them run 70 or 80%. So that would put this thing at, from 160 times 1.7, would put it about 272 before it's really in the range where I would consider shorting it. So somewhere in the 250 to 270 range, I might start to consider it. But until it gets there, not yet. Anything else in here? Palo Alto Networks. That's just another NASDAQ stock, so that's going to move similarly to Amazon, I'm going to guess. Yeah. So, it's been beaten down. Looks like they had some nasty earnings or something here on the 22nd. So this stock's been beaten down pretty badly. This is not nearly as nice as Amazon, right? Because Amazon's a dip in an uptrend. Right? This thing is a faceplant after what looks like bad news in sort of a downtrend. So much different. Sears Holdings. This is a good trading stock. This looks nice. So I actually had this long over here at 1150 or so. And so I caught this little pop up through 13. And now it looks like it's sort of trying to break out again. So yeah, over 1350, that looks good. This is kind of a spiky stock though. It's kind of tricky to trade. So just be aware of that. It's kind of a pain in the ass to get in and out of it. But if you can catch it, it definitely can run. It's got a ton of shorts in it if I remember correctly. Yeah, 22.08%. So, and it was even higher than that. I think it was like 35 before this last little squeeze from 11 up to 14. So it's definitely got some juice. If it can get through that 200-day moving average, this could really run. So I like that a lot. Siri short, way too much float. Pandora, we've got rumors that they're going to be bought out or whatever. I didn't even look at this thing. It's not up enough to short it yet. You can't just short on the first day. You got to give this thing time to sort of exhaust itself. Cone, AKAO. Both stocks I've traded in the past. It's in a downtrend. Nothing exciting. AKAO. This is kind of interesting. Big resistance here. So it's been trying to get over that for a long time. It looks like $6 is kind of its short-term resistance at the moment. So over 6, if it sets up, right? Not immediately, because right now it's come from 380 up to 580 and then down to 480 and then up to $6. Like, it hasn't really had a chance to consolidate and rest like it did over here. See how you had this like nice, clean little 2-week consolidation, and then it broke out nice and cleanly? Of course, it ran right into that huge $6 resistance, and so it got sold off. The real buy was probably back here off of this. When this previous breakout failed the $6 breakout the first time, and then bam, right back down to the 200-day moving average. Previous resistance becomes new support, and then off we go. So right now, if we could consolidate sideways for a couple weeks, yeah, over $6 that could go. And then there's one last one that I wanted to mention, which was Dries. And this got actually downvoted. I just wanted to talk about this stock for a second because there's a lot of people that are going to ask about this. There's a ton of people that are going to try to trade this thing, and most of them are going to lose money. If you're going to long this thing, you really need to know what you're doing. It's not an easy stock to trade. It's got so many bag holders in it because of this huge run from $4 up to $120, and then the halt, which then opened at 50 and crashed back down to 10. This is just, there's so many people that are stuck from ridiculous prices, right? That bought this thing at $100, $110, or $80 or whatever, and now it's $4 or $5 a share. Every single pop gets sold off because of that. Anytime this stock pops up, it just gets sold right back off. So this is really a short. However, you can't, most people are not going to be able to short it because they're not going to have shares of the stock since there's such little supply. So if you're going to long this thing, make sure that you know what you're doing. I don't personally think that it's a good idea. I'll trade it on stuff like this during the intraday breakouts, but I'm here at the computer all day, so I can manage it like on a minute by minute basis. So if you're not in that type of situation, you're just going to end up getting trapped and end up losing money. So just a little protective note there, I guess, for everybody. I would stay away from Dries. I'd also stay away from Globus. Globus is very similar to DRYS, to dry ships. It has a big risk if it takes off of being halted and opening up at $3, just like Dries did. A lot of these other shippers, Tops, Ship, Eagle, all these things, they're really tempting to trade because they make huge moves and they do it really fast, but it only takes one time to get trapped in one of these things and your whole account is gone. So there's my little preachy word of caution. Thanks for tuning into these videos every week. I've gotten a ton of support on YouTube for it. It's really awesome. So if you like them, if you have comments, please feel free to comment, subscribe, do all that stuff. And also, I always throw a link to all of the stuff that I do for free, like my free newsletter and my blog and all of that stuff. That's always in the description. So if you haven't signed up for that stuff yet, I definitely encourage you to do it. It's very useful information, and it's 100% free, so there's no reason really not to. So with that said, thanks very much, and I'll see you next week. Peace.